Thank you, Angel, and Heidi. Hello, everyone. Welcome aboard. It is another week of Trading Buddies, and I am so pleased you could join us. Welcome, wherever you're coming to us from, and the new people in the room. I think I can see a couple. Welcome to you. Hi, Chris. Great to have you on board. Hope you enjoy what is about to unfold in the next 65, 70 minutes or something like that. And welcome everyone. Hope you had a wonderful weekend and looking forward to the new week, which of course begins with Monday. I was about to say US bank holiday. That's what I really meant to say. And that's all very true, which could make this a fairly boring old Monday. We shall see. A little bit, of course, has happened since we last met, which was on Thursday, not least of which was NFBC, previously known, of course, as NFP, which was interesting. It was a big miss in terms of what was expected, and that's kind of a little bit on the dreary side for the US dollar. But I did note that the unemployment rate was good. It fell, and average earnings were up as well. So probably on balance, thinking the headline act was overshadowed by the latter two. Pardon me. Let's get stuck in, shall we? Ash, of course, be joining us very shortly, and he may well have a trade for us. Let's see what's happened since we last saw you. A couple of things, actually. First, of course, is we were in £2 versus the dollar, or good old cable. We were in two trades here, long here and long here. This is the best we've been, I've got to say, since we got into those positions. And I've got to remember now, because my chart seems to have lost its range. That's interesting. So I can't remember where TP1 and TP2 is. If anybody can, TP1's 1-to-1. TP2 is 2.5-to-1. If anybody can and would like to share that with me, that'd be awesome. So I know where to take some profit. That would be good, because I've completely lost the plot. I don't think I wrote them down either, which is unusual for me. But I don't tend to write the pound breakout trades on. And now, speaking of which, are we going to trade a pound US dollar breakout today? Answer: no. Why? Well, because we've already broken out. It's pretty much that simple. There's the range in there, and broken the range already, so we can't trade the breakout. It's already happened before the open, so answer no. Now, let me see if I can work this out myself. Thursday's entry would have been Thursday's entry at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So it would have been a breakout there. That would have been our entry. So why doesn't make sense? Or does it? Does it make sense? No, I'm going to have to leave that until I get my head around it. It's not working for me at all, because that should have been our breakout. Friday, Thursday. No, that wouldn't have been the range. It would have been the range up here. Okay, now I get it. So there's our entry for Thursday. Our stop loss for Thursday would have been where you can see that line. Everything's going for me, and I've still got the bloody sell in place. Goodness me. Okay, that's got to stop. Get rid of that.
Hi, mate. I don't want to be. I want to be really quick. I don't want to interrupt you.
Right.
I haven't got my other computer set up yet, so I can't show you screen. However, a short on the FTSE on the open is probably what I'm going to take. I will holler if I do take it, but I am looking the FTSE setting up for a short this morning, around about 5 pips above where we are now. So on daily pivot, basically looking for a short on the FTSE 100 on the open.
Happy days. Got that, guys. We'll be back with Ash very shortly to have a little further look at that. But
I'll be back.
Yep, I'm sure you will. Let's try and work out exactly where our take profit areas are here. We're not anywhere near them, I've got to say. So no need to go into a panic. So there's the range from there to there, which was there to there. Stop loss there. 108 pips. That rings a bell. So 108 pips away is our first area of concern, which is at 137.44. So let's put that in. So I don't need to do anything until that happens. Now, the one from Wednesday, I think it was Wednesday, might have been Tuesday. Let me see if I can work that one out. Let's get rid of that. Go to there, get rid of that, there, and go backwards in time. So Friday, Thursday, Wednesday, Tuesday. So the range was here. That's our entry. And the stop loss would have been pretty much being on the same place. But look at that. No, that one. Okay, got it. Right. So the range there was that one to that one, 117 pips. So we go 117 above there, which will be our first take profit, which really isn't a take profit. It just means you move your stops. There it is. There's the line, 137.61. Okay, cool. Got it. And there were our other take profit levels. They were there all the time. Somebody should have told me that. From Ross Harvey. Good afternoon, Ross. G'day, Roscoe. What about long euro today on the back of the daily chart candle formation? We'll have a look. Ash, what is the code for the FTSE on the market chart, mate? On Fusion. G'day, SF.
Should be UK 100. There's no trade yet, by the way. It may well come up. I'm still waiting, but UK 100 it should be.
Okay, we will have a look at the euro. Certainly.
I'll try and bring up my Zoom on the other screen so you guys can see what I'm doing. Might miss the trade to the downside just while I wait for conditions to be favourable, but they could be turning. Okay.
Very, 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 very difficult to be anything but bearish, the euro versus the dollar at the moment, one would have to concede. We have broken through what I suppose realistically is a neckline, and the possibility of coming back to retest that area is, of course, strong on a monthly chart. Don't forget. Go to the weekly, you can see the break of that that trend line, and also a little bit of follow through, bit of a spinning top sitting there, indicating indecision, and potentially, yes, of course, we could come back and retest that, and I'm all for such things. Do I have the right to trade it is the question. And the answer for me at this point in time is not yet. What I would need to see, and this is always the same for me, when I'm looking to trade a reversal, I'm looking for a reversal pattern. Number one, I don't see one here at this point in time. You could probably argue that that's a, what do you call those things? Morning stars or something. Probably hasn't pierced that candle enough. Maybe it has. But that's not for me. I think that's a question mark. You could go to a smaller time frame and say we've got a double bottom sitting there, and I'm okay with that. That does make a little bit more sense to me. But what I need to see after that happens is a higher low. And at this point in time, I don't see that. This looks like a beautiful scenario, however, for that to occur. So if I got a bounce here off the weekly pivot and price came down to the daily and rejected it with a candle that looked something like that candle right there, if I could just cut and paste that and put it over there, I'd be very happy. Then I would look to trade that long, most certainly. But until that happens, to me, it's pretty much guesswork as to whether this big selling occurrence on the euro versus the dollar has come to an end. So I can't see that at the moment, Ross. All right. Now, I'll just go quickly through what my weekly watch list contains, and then we'll come back to Ash and have a look at that trade or that potential trade.
Ready to go now. So
I will go now because
I don't mean the trade is the trade isn't shaping up yet. It might not be a short actually. It might end up not transpiring at all. But it might be that we get the highs instead. But I can show you that whenever you're ready, mate. What I mean is I'm ready. I've got Zoom up. So
well, you go. Then I'll come back and do these longer term.
All right, that sounds good.
Analyses to be more grammatically correct.
Let me just set up my chart here then. Oops. Okay. Let's bring into Zoom.
Interesting NFEC, mate, it was.
Yes, it was, mate. You're absolutely right. It was very interesting, and it spooked the market, which is one of the reasons I was thinking actually the short could be on this morning. But you know what? It's doing all right now that the FTSE 100. But if we come to have a look at this in some detail, you can see this is the area that I was looking at. Just before we opened up, we were down here. But there was just no trade. You know, there's no trade as yet. But it might still transpire. We're only 10:06 in. And it's possible that it comes down. The other thing we have is earnings season that is coming in. Now, of course, this could break right the way through here, but that's okay. So let's see. Now, this is another area for a short that I wouldn't mind. I don't mind this at all. Let me just see whether this is on. Yeah, I think it might be. I'm going to take the short here. Now that looks pretty dumb, but the reason that I think that it's okay is that if it breaks through the level, if it sort of says, you know, and remember I'm only aiming for a little bit here. If this decides to break through the level, it won't matter because because this has proved to be pretty good resistance. If we look at this on longer term timeframes here. Let's put this on here. You can see that there is a level here on the longer term time frame. This is the daily chart, and we're pretty much on top of this. If it decides to go through here, the likelihood it comes back, retests, and gets me out at break even is pretty high. And I'm sort of, you know, what I'm doing is I'm kind of putting in all the information that I have, and what I have is a weaker jobs number from Friday, which has spooked the market a little bit. We've got earnings season coming up. So is the market likely to move heavily before we kind of get deep into earnings season? I would have thought not. You know, nobody knows what's going to happen, but I would have thought not. We've got Fed coming out. Okay, that's in another couple of weeks. So, or is it this Friday? Either this Friday or a week Friday. That may suggest that we could put the brakes on here as well. So all I'm really trading here is the potential.
We have the Fed, mate. We might
mate?
have. We shouldn't have the Fed. We had the Fed. Didn't we have the Fed 2 weeks ago? I think you'll find it'll probably be the minutes.
It'll be the minutes. Okay, yeah, it'll be a minute. Okay, so that's another reason that I think that it might struggle to get through this level, and that's all I'm really trading here. I'm just sort of saying we've got a few things out here. I'm only after a little smash and grab here, so I'm saying, you know, that it may not be likely that we get an out and out breakout when we got a few things kind of on the pipeline. I don't think there's anything else there's nothing else in the US jobs report, is there, until the Fed's either minutes or next meeting?
Shouldn't be.
The US
because the unemployment rate was contained within there. It's good unemployment rate as well.
The US is on holiday today for Columbus Day, so that may also kind of put some. It might just mess this market around a little bit. Let me just see what I got here for data, because this is going to be relatively important for this. Now, one of the reasons that the jobs data being so weak could be bad for the market. I mean, it's always, you can always read these things in two ways. The first way you can read a weak jobs number is that the Fed are unlikely to move. So market conditions, in a way, are more accommodative. The second way you can read it is that the expansion of the economy is slowing, so it could affect earnings. And I think we've had JP Morgan out this morning, or at least one of the bigger banks out this morning, saying that they're expecting weaker growth in the United States. So there are a few sort of factors at play which would suggest to me that that we could start to at least get into a range up at these higher levels. But as I say, if it breaks through, it's not a big problem. We'll manage it as we go. Average earnings were higher, but the employment change was significantly lower than it has been, significantly. And I think that's the worst print we've had. If we look at this on the graph, it's the worst print we've had. Let's get rid of the forecasts since the start of the year. This is a bad number. It really is a bad number. So a lack of potential growth there might put pay to any more upside in the market just for right now. Earnings season may do the same thing as we wait on some of the numbers of the growth story. What else do we have? So job openings, but that's not really bond auction. The bonds are still pushing higher, so there's still a little bit of the yields pushing higher. We got some numbers there. Oh, the minutes are on Wednesday. That's not the meeting I was talking about, actually, mate. I was talking about it's a week Friday. Okay, so it'll be on the 22nd, I think. Oh no, maybe I'm mistaken. Maybe I'm.
What is it?
I thought there was an announcement from the Fed. Maybe no. Do you know what? I think you're right. I think it is the minutes. I think I've heard the day wrong. I think it is the minutes. Yeah. So the minutes, and the reason that the minutes are interesting is because it will give us an idea of how they feel about the current jobs numbers. Because remember, Jerome Powell said that he wouldn't. It doesn't need to be a stellar number for them to consider the taper. An okay jobs number would still put the taper on the table. And I think the minutes become important because it was neither. It wasn't stellar and it wasn't an okay jobs number. It was a pretty terrible jobs number. So where does this put the market? And I think that's one of the reasons that that I think we could ease down a little bit. I just don't see why the confidence would be there. So that's why I've taken that short. But manage it as you will. I mean, anybody that's having to use stops on this, difficult one, because you probably could put stops 10 pips above where you are now. I'm not sure whether that's going to be clean enough. So again, that might be a bit of a tricky trade for some people. It's not a really clean level in some respects. I mean, I quite like the fact that it's right on highs, but right on highs could push through another 20 pips and then start to come down. And you're looking at this up here, but I'm literally just trying to grab 10 pips out of this, and I'm going to get out. So I'm not after a lot here to try and take profit. So you may have to kind of either avoid the trade altogether or take a bit of a punt on the fact that you've got 10 pips above your entry price to try and get your 1-to-1. So a bit tricky. But yeah, there's a few things, mate. There's a few things that I think that make this market just a bit more. Well, we were talking about the potential change, and I think it makes it a bit more dangerous to look for the upside. Yep. If we look at the S&P, had a fairly good recovery really towards the end of last week. But if you look at the price and the pattern, it's almost on top of the area of potential resistance here. And there are probably other lines here too. There's one there, it looks, by all intents and purposes, like we've got a sloping head and shoulders kind of pattern here, going down here with a neckline down here, which suggests if it's going to break through, then there could well be another big move down on the S&P down to around about the 4150 level from 4370. So it's a relatively high move to the downside, another high move to the downside, maybe another 8% or something to the downside, and the earnings season would suggest that could happen. You know, that could, we may well get a bit of a downward movement in the S&P, because people may well start getting a little bit nervous about the lack of growth and the lack of profits that they're going to be able to take from the American stocks. So that looks a bit weak, and we're looking to see whether that transpires. Looking at the VIX, it's at a point where it could start bottoming out down here. You know, it's again, it's a daily chart, so this is another sort of issue for what, you know, US stocks right now. And because we've got the Columbus Day, it might be that we don't really move very far today. It might just not go anywhere. FTSE might do well, you know, that the European stocks might do well, but come tomorrow, that may be when we get the profit on the trade that I've taken this morning. I don't know, because this holds. S&P doesn't manage to break through these levels, then come tomorrow, it might be that people start taking the profit that they managed to grab back here and say, you know what, we're still in a downtrend and we should really probably start covering those positions. So I think that the propensity for downside is relatively high. US dollar almost tells a different story in some respects. If you regard the US dollar coming down and the S&P coming down as counterintuitive, it doesn't normally happen. But I looked at the US dollar yesterday and I put in a level on the monthly chart, which is this chart here, and this suggested to me that we are on a trend line on the monthly chart there, where there's the touch there, there's a touch there. And we can tidy it up now when we're getting close. Touch there, no problem at all. We can probably come down to about there, because if we go back here, you can see that this is now cleaner. It's touching here and here. When I did the initial line, it came in and it started to get involved in that price action. But if you look at the low and the low here, almost touching, that's not quite perfect. I think this starts to become really interesting, because it does depend on where you end up putting your level, probably there, and we're just underneath that. So a primary trend line on that, right on top of a neckline as well of the inverted head and shoulders, probably a horizontal level up here has been hit as well. This technically as well would suggest some downside in the US dollar. So that may be the only caveat for the S&P. However, just because this is coming down, suggesting that we get some resistance here, it doesn't mean it's coming down far. It just means that there's likely to be some profit taken here. So I quite like the weakness to come back in for the US dollar, at least down to around about the 93 level, 93.20 maybe, on the dollar index. Whether that boosts other things like gold, I just don't know. There's also this kind of energy issue that's been kind of plaguing the markets recently too. So yeah, I think a bit tricky, mate. But I'll tell you what I would say is that I would treat this the same way that I would treat the FTSE. You know, the FTSE is gone beyond the level here, but that doesn't really bother me in the slightest. Because what I would see, if this does start to burst forward and it does start to burst to the upside, it would start to look like a bit of another one of those situations that just looks like exhaustion. And I'd probably take another short up here, actually quite comfortably. I wouldn't mind that at all. But it would start to look like a bit of an exhaustion if we get a big surge to the upside just before we have Fed, just before we have earnings. It's one of those things that I think we're okay with sticking with the short, as long as we manage it correctly. I think we can kind of flip around here and play with this a little bit.
Hey, Titan Ian, love you too, buddy. Thanks for joining in. Nice to see you in the room. You've got a question, Ash, as well. Can you see YouTube?
No, I can't, mate, but I will pop on there.
Okay, hang on. I better give you my order because it's getting close to entry. I'll do that first. And the question is, if resistance level of the W formation, I guess, would you not look to go long for 30 points? That's the question. I will share this. I will share this first.
Yeah, sure thing. Just let me know if that relates to the dollar or the FTSE.
Okay, Ross, dollar or FTSE, mate. Right, now, pound Aussie, which is kind of my pair of the week. I see this as downside, and it could be substantial. It could be substantial, but I'm thinking this level anyway, 84.11, and we're at 86.11, so a couple of 100 points away from there. It's got to get through this level, of course, and that is going to be the key to this trade, I believe. Now, if you want to follow this, I am selling it at 1.8589, and it's based on the daily chart. 1.8589. I've got the stop loss at 1.8681, and I've got a first take profit at 1.8543. So actually, I better write those down. Pound Aussie short at 1.8589, and I've got my stop loss at 1.8681, and my first take profit is at 1.8543. Now, for those of you who don't know how I trade, the very first thing I will do if I get to TP1 is move my stop loss exactly the same amount of pips that I'm taking as first profit. In this case, that is 46 pips. And I will move my stop loss 46 pips from entry, so above entry. So, and take 50% off at that point. So I'll bank 50% of the trade. I will move my stop loss exactly the same amount of pips that I take at first take profit, giving me a free trade if I'm fortunate enough to reach TP1, as we did last week when we traded that bar. That bar there looks familiar. We traded that bar, so it looks very familiar. It's the same. It's exactly the same candle at the end of the day. We got TP1, but that's all we got when this candle came back and took our trading stop. So that was a break-even trade. Had we stayed in that, of course, we wouldn't need to be worrying about putting this back in the market. Oh, sorry, when I say had we stayed in it, that's not the way I trade. But I think it was only by a pip or two that our trading stop was hit, and therefore taking us out at break even rather than being now somewhat 160 pips the good for a risk of 110, 115, something like that. So it'd be well past 1-to-1. Bit of a shame, but that's the way it rolls. Let's hope we can catch this as it goes and falls further. Right,
Yeah,
mate. Sorry about that.
This is pound Aussie, mate.
This is pound Aussie.
Yeah, well, I mean, when you've done that, actually, I'll show you what the COT data is suggesting on that, because the COT and the seasonals would heavily support what you're doing here.
Okay, cool. Well, I'm finished with that one. Do you want me to go through the others?
Oh, I'll tell you what. Let's quickly do Ross's question, and I'll quickly show you the clock. It'll take me 5 minutes.
Yep.
Cool. And then we'll come to the others as well. Just to say on some sort of tack. So what we got now is this the chart you
were on an hourly chart apparently.
I mean, this is the W pattern, but this is a monthly, so I don't know whether maybe Ross didn't see the time frame. Is this the one you were talking about, Ross? Actually, that was on the previous hourly chart. Is the chart we were talking about the W here?
No answer.
What's that? Sorry,
I haven't got a response yet.
No. Okay.
Okay,
all right. Let us know. I mean, if the question if the W pattern gives way and it goes to the upside.
That's the chart, but couldn't see the time frame. Yep. Okay, you got it.
Okay, great. Okay, so and is the question is if this W pattern
if the resistance level of the W would, if it goes, I guess, would you not look to go long for 30?
Oh, I see. Yes, I would. I absolutely would, because I mean, that would be a very, very strong level to break through. But actually, at that point, I think we could be looking at something a lot more significant than 30 pips to the upside. But yeah, I think initially you could certainly look for a 30 pip run. I mean, what would that be down there? I mean, that's 70. So I think more than 30. But you would have to see it give way and make sure it came, when it came back, or if it came back, that it actually held the level. So if it started to shoot up, which maybe this whole taper thing could do, but if it did start to shoot up to these levels and beyond, and then start to come back, so through and then back again, then that would this area would then become support. So it'd just be classic kind of support and resistance trading. And you probably want to make sure that you're entering above the trend line. But I think that if that was to happen, then these levels are interesting. Yes, that level could be these levels along here could be interesting, but this level would be really interesting. So there may well be something a lot more significant than just a 30 pip move, in my opinion, Ross. Because remember, this is a monthly chart, so this is the behemoth. This is the big gun. So if the monthly chart starts to reverse and go in the opposite direction, then it's telling us something pretty significant about how people feel about the dollar, because it's obviously buying over a longer period of time, and support over a longer period of time. So if the dollar was to give that particular level, if that get through that particular level, very, very strong signal in my opinion. I'm going to show you the COT data though, because the COT data suggests something completely different. Aussie dollar here. Look at the Aussie dollar here, mate. And I don't know how comfortable you are now with the COT data, but I'm pretty sure you understand these bits here, which
I understand what you tell me.
Yeah, what you got here is the index at 36 months, so 3 years effectively. So it's showing us over a 3-year period. What's the kind of calculated index over a 3-year period?
Yep.
And at 100%, it's very, very strong and very, very bullish. Anything over 80, I consider to be in the buy zone. So when you sort of get up to the 100%, obviously you can't go any higher than that. Very strong over 36 months, very strong over year and a half, and very strong over 6 months. So massive, really. Lots and lots of positivity here for the Aussie dollar. You bring in the seasonals to add that to it. Look at that for October. I don't know where we are in October because it doesn't give me the exact day, but what this does give me is the month. And we see if the month starts down here, it ends somewhere up here. We know that October's a bullish month for the Australian dollar. So, no worries, Ross. Yeah, gotcha, mate. Gotcha. The 30, yeah. I mean, I suppose that's the thing. If you start measuring it, now you know what chart time frame I was looking at. You might come up with a different number, but certainly your analysis, I think, would be right. If it breaks the level, then you are looking for much higher. We'll do a little bit of a measurement on it in a minute, actually, and I'll tell you what I would look for. So that's very strong for the Australian dollar. Now you're trading it against the pound, aren't you?
Yep.
So the pound, little bit of a different picture in some respects, because you've got the 45 on the 3-year index, and the 3-year index the most important. As always, the longer the stronger. The shorter term, it doesn't sort of say that it's going bearish, but I don't like to look that much at the 6 month. I think the 3-year, maybe a little bit of the 18 month is fine, but that's in the middle. 45, neither here nor there. You bring in the seasonals, and the seasonals on this pretty sticky. Starts here, ends here for October, so pretty sticky. So what you've got really is a strong currency versus a relatively benign currency.
Middle of the road, yeah. Yeah,
middle of the road. So that's looking good. And just to sort of go back to the dollar as well, just because we were discussing it, 10% buyers in the dollar. So very weak on the 18 month, and very, very weak on the 6 month. Now the only reason I'm mentioning the 6 month now is because it confirms really what we're seeing on the longer term. So the dollar looks very, very weak, and that's, you know, when we're looking at the chart pattern, it kind of suggests that, you know, that the commercials aren't getting involved. Now we look at the seasonals, and the seasonals are probably, you know, if we were about here in October, the seasonals actually look okay, don't they? They look pretty good, and it looks like we could get a run with the dollar to the upside. So this is saying, but be careful, because the seasonals don't agree. So be a little bit careful with the dollar, and that's why I say a little bit of downside might actually promote ultimate upside, but I just don't see it going straight through the level as where we are.
As I have done for ages, I'm finding the dollar really, really tricky. I think it's a very volatile situation with the dollar, because
I agree, mate.
That COT data thinks what it suggests exactly what I've been thinking for the longest time, as you know. Yet the other forces are against that.
Yeah.
So, you know, the numbers aren't bad. The fact that the stock market is likely to fall further, you know, all of those little niggly things that suggest that the dollar isn't done yet. So that's kind of the basis I'm steering clear of trading against the dollar.
I'm with you, mate. And that jobs data on Friday does not help the case for the dollar long out at all. I'll tell you what, I was trying to trade gold again last week for frustrating results, very frustrating results.
There's another reason, yes.
Yeah, really, really, really difficult. So this is what I look at, Ross. When I look at the pattern, the W pattern here, I'm just going to take these levels away so it's a bit easier to see. When I look at the W pattern, what I see, what the way I measure it is that I look for the neckline along here, and I look for the shoulders down here. So if I put these levels into there, and I measure in between these points here, and the guy that taught me to trade, is, you know, he used to do this. A guy called Rick Mansfield, very, very clever guy. He used to do this, and where some people would measure down to the head, he liked this because he said it was a bit more conservative, and I agree with him on it. And this leads us up to these points here. So actually, it's 200 and looks like 234 pips would be on the dollar index if we were to get to that point there. So that's what the measured move of the pattern suggests. You could say, if you want to be really conservative, you're going to go to the top point of resistance and to the neckline, and that would bring in this area here, this horizontal area here, which is around about 100 pips to the upside. So there's a few different ways you could certainly look at it, but either way, I think what you probably want to see is it break up here, touch this zone, come back, and then trade it rather than trading it first time around. But have a good look at it, mate, and you know, you might see something different. That's just the way that I analyze the pattern and the chart, but everybody analyzes it differently. Jeff and I will draw trend lines in completely different places, but neither of them are wrong because of the way that we approach the market, that they kind of work for us. So that's just...
I've got my level at 94.62.
94.62, okay.
That's my horizontal level. And that's the one I think it's going to struggle to get through. The next one I've got is at 93.46. And I think we're there for a while.
We are there. 93.46. Yeah, there. That's the below price, right?
Yes.
Yeah.
And as I said, I think on Thursday, I think it's in no man's land. And
yeah,
I like your resistance area, but I think there's support directly underneath it. So I just can't see a way out of this at the moment. I think it's just range bound.
I'm with you on the 93.40 level, mate. Absolutely. I mean, on the shorter term time frames, this is where we are. So this breaks to the downside. I think that this is on. And I suppose what I'm suggesting is that COT data And the fundamentals have just given us a little bit of a hint that that some profit taking on the dollar may be on the cards, because you've got the Fed coming out in a few days, and you've had a number which may just say don't taper. You know, maybe it's saying the road to a choke in that dollar supply is not quite clear yet. So there's I think there's enough factors for people to say, if I got in at the lows, if I got in down here, this is a great place to take profit. You know, we got a suggested double top here as well. Would you want to initiate a new dollar long position here when you're on a primary trend line, when you've got COT data suggesting that they are taking a hedge to the downside, the commercials are taking their hedges to the downside, or they're certainly not buying at this particular stage? You know, if you really look at the COT data, then you can go in a little bit further and say, okay, who is it that's driving this 10% on the index? Is it the buyers or is it the sellers? And if you look at it, and we look at this this chart here, it's the sell that is coming in. The buyers are actually, let's take the net away here. The buyers are actually staying pretty flat. So no more buying is going on, but the sellers are starting to say, we need to hedge. Look at that extreme that happened a couple of weeks ago as well, mate. This really is suggesting that, you know, on the commercials, and it's only one aspect of information, but it's information that is out there that we can utilize. These are big players in the market, and the COT data is telling us that the big players in the market are actually hedging their longs, if you like. You know, they're hedging their positions, because remember, these are the guys that have got they've got skin in the game. They've got their hands on the dollar, and what they're doing is hedging out the futures contracts by shorting the futures contracts, and there are no more buyers coming in. So this is a pretty strong signal. You know, when you look at this, it's a pretty strong signal. Let's see what happened here. Now, I'm not looking at the price action, so I don't know. But let's see what happened here and see what did happen last time. Sellers came in, and actually, you know, and I'm glad we didn't look at this before, just to kind of make the case in point. But actually, what happened was the dollar just moved sideways. In a way, it kind of supports what I'm saying. What we're saying at the start is that just because I think the dollar might ease back, it may only be an easing back rather than an absolute collapse. But this is definitely saying sticky times. Yeah,
when I look at that chart, it's spent from where? Maybe the beginning of 2019. Is that January? Sorry.
This is January 2018. This is July 2018.
Right. Well, when it broke through that resistance level, what is that level?
Here?
No, when it broke through. The next one up.
Resistance. Oh, here?
No, the middle one.
Oh, here at this point.
Yeah, the line that's actually on your chart, that white line. Is it 93 or 95?
The line from here, it's difficult to say because this isn't an interactive chart, but yeah, it's probably actually I can probably get it up here. This high here is at 95, yeah. Right.
So since that time, so 2019, let's say, so 2 years, it spent all its time above that level. And now it's been below that level. Tried a few times. It's trying it again. Since when? So only a bit over a year. It's been trying to get back above it.
Yeah.
So we're looking at the big spikes, probably COVID in the middle there. January, yeah, it would be.
Yeah.
That big spike in the middle would be COVID. And yep, there. And the market's decided that since COVID has kicked in, I'll put it that way, that the dollar doesn't belong anywhere above 95. And I agree with it. So yeah, until that level goes, and I've got no reason to think it will, none at all, I've got to be a seller.
Yeah, I agree, mate. So I mean, back to the dollar index here. Oh gosh, hold on a second. Here we are with a FTSE. We're just about to take profit on the FTSE.
There you go.
Couple of pips away. I wonder if that's support actually. No, I'll check it. I'll check it in a minute. But yeah, looks like that FTSE should end up as a profitable trade. I'm tempted to just have a look at the. I'm just going to have a look at the pivots here. Oh yeah, it's got some room there to come and test that pivot. So I'm going to leave that and see if it and you could go and try and aim for this down here, but that's just not the way I play it. All I'm trying to do is just grab my 10 a day, and if it does that, then I'm pretty comfortable. So let's just make sure I haven't aimed too high. I don't think I have. Should be good, mate. Well, I'll leave that. I'll ignore that for right now and come back to it. Actually, well, I'm only about 3/4 of a pip away here. So let's see if we can get our profit out the FTSE. Come on, a little bit more. There he goes. Okay, so we got little winner at the start of the week. Let's go back to this dollar and discuss this. But in actual fact, mate, I'm taking up your time now because you were going to go through some things. But
No, you're right.
Just to finish up here, we were looking at the 95 level, weren't we?
Yep.
I think the 95 level does pose a really interesting question because, as you say, it spent most of the time above that level, and now we're sort of getting close. I mean, I wonder whether it is at 94.50. It's difficult, isn't it, when you sort of like pick a level like that that's been going on for such a long time. It may not be exactly that price. It might be the price might be slightly above, it might be slightly below. But as you say, we're in the area at this point. And anywhere around here could well be, it might look like a false break. You might break through this little level, but get to 95, and actually that's the level, so it breaks down. So I think
that's what you want to see. That's exactly what you want to see.
Yeah, you want it to be decisive, wouldn't you?
Yeah, but you also want it to pierce that level, get through it.
Yeah,
and then come back under it. That's what you want.
Yeah. Okay, mate. Well, let's get back to your stuff because I feel like I've hijacked your analysis a bit.
Not a problem. It's always, as always, on a long time frame anyway. Apart from that pound Aussie thing, which was getting close to entry, is now very close to entry. I will repeat that if you weren't in the room. I'm entering short at 1.8589, and I've got a stop loss at 1.8681. And my first take profit is at 1.8543. And if you don't know how I trade, the management of this will be the same as always. I will aim for a TP1, which is here, at which point I will take half of my trade off the table, so bank half, and move my stop loss exactly the same amount of pips that I take at TP1 from entry. There you go. We've now been entered into that. So in this case, if we get TP1 at 43 pips, I'll move my stop loss 43 pips above entry. That will make you safe in the market. So the worst thing that can happen is you'll win nothing and lose nothing. Hopefully it's not the case. With this method of trading, what we're looking to do is actually take profit in this part of the trade. First part of the trade is simply there to get you safe with a little bit of breathing space. That's the whole theory, right? And if that's the case, what you should be looking at is a win-loss ratio that's fairly high. It should be around about 80%. When I say win-loss, I mean win and break even versus losers. I don't mean 80% are outright winners. 80% of those scenarios, if you get these TP1s right, you should be looking at an 80% win-loss ratio. So every 10 trades, you should be looking at 4 winners, 4 break-evens, and 2 losers. That's the way it works. And I'll leave you with that one, pound Aussie. Now, I did have a watch list for the week. I think I started and told you about, or did I get to Euro Yen? I'm not sure. Euro Yen is the game changer bar for the week. There's only one, and it is Euro Yen. Now, what we're looking for here is, those of you who are here for the first time, a weekly game changer bar is a key reversal bar. So what a key reversal bar is, if we're, for instance, got a bullish key reversal bar, which is what we've had, I call them game changer bars because I like to have my own names for things. So there. It was preceded by a whose low was higher than the game changer bar. Or to put it more precisely, or more understandably, the game changer bar has a low lower than the low of the previous candle or bar, whatever you want to call it. That's part of it. The other part of it, or sorry, the next part of it, is it closes on or near its high, which this one clearly has. Now, there's far more to it than that. You have to have a market that is going, let's say, long term in your direction. I actually call it the dominant market structure, which in this case is not really easy. So I'm on a monthly chart, right? Now, what I'm looking for is, what is the dominant feature of this chart? Is it the triple top sitting up here? I've got to answer probably yes to that, because I'm looking for reversals, right? I'm looking for double tops. I'm looking for head and shoulders, inverted head and shoulders, morning stars, shooting stars, hammers, all those sorts of things that you generally find in your textbooks. So I'm looking for all of those things. And to my mind, the most dominant one of these on this chart is probably the triple top. So I then would go, all right, where's our trend? It's there, it's been broken. But has it been rebroken to the downside? Answer no. And I've got a strong support level under here. So I'm probably thinking this can go long. It is certainly trending long, and we've got a double bottom, higher, 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 low, higher, high, potential higher, low. So the weekly chart is then throwing up at me this key reversal bar, and my bias is, I won't say long term, but I will say medium term. My medium term bias is long based on what I've just seen. I've got a double bottom sitting here, but I've got a strong range, and we've been in that range for 3 months. That's a weekly chart, something like that. Let's say 3 months. So what we're contending with here is trading through the top of that range. And that's the reason I would not take that trade, because we've got strong resistance here, strong support here, strong resistance, strong resistance, strong resistance. Why would I think that now is the time that this is going to break through that? It could, totally could. But why would I think that's going to be the case? And on top of that, I'm a range trader. I'm not a trend trader. So what I'm looking for here is not to trade this long, but to trade it short, because I will hit the top of the range. So I'll look for a reversal bar, lower high, look to trade it short. But I'm on a weekly chart, and the weekly chart is telling me that this is going long. Cool. I'll just ignore it, because I can't trade it long because of that resistance level. Long way around going through this, I know, but if you want to know how I do it, then you probably have to just listen, because this is how I do it. The next one is dollar Swissy. Now, dollar Swissy is not a game changer bar, but it is one that's on my radar. And the reason it's on my radar is because of this particular scenario. Yeah, I hate the Swissy because of 2015, January 1, when this thing just went kaboom. But same principle I just applied to what I was talking about, Ash, or with Ash. Longest time above this level, longest time, from 2015 In fact, before 2015, go back to the mid 2014, decoupling of the euro to the Swissy, kaboom, straight back up there. So it loves it above this level for all of that time to July 2020, something like that, till it broke back through. Yes, the first July 2020, well, July 2020, broke back underneath that level and has been there ever since, bar this false breakout in March this year. What happened in March this year? Can't quite recall anything substantial. I can tell you about March last year, as everyone can, but March this year, not sure. The anniversary of COVID pandemic, that's all I could give you. but there was
I'll tell you what,
probably
mate.
something,
You know, if what chart are you looking at? Is that the dollar?
that is dollar Swissy.
Dollar Swissy. I'll tell you what did happen in March this year. As you say, you know, anniversary of COVID, which means that there would have been some positions that were taken in equities as we started to buy up again. So because of that anniversary aspect and the 12-month aspect, that means the tax aspects would have kicked in. So that it could have been something to do with that.
Interesting. But for whatever reason, it produced a false at that level. And since that time, we have been underneath that level. So going back to what I just said before, why would I think now is the time that this breaks through this level? I couldn't possibly give you an answer that makes sense. So for that reason, I've got to be a bear. If I'm absolutely stickler to my reversal pattern theory, which suggests that I get a reversal pattern, which I have right there, and I'm looking for a lower high, which I probably have right there. So I probably should be trading this now with my entry underneath that bar and my stop loss above it. Why aren't I? Good question. Probably because I missed it. But look what I've got since. On the daily chart, I've got game changer bar, doji, another game changer bar sitting on last week's weekly pivot. So I've got two game changer bars. Toys the top, yes, but out of context, probably. I'm sorely tempted to trade this bar, but I need my stop loss above that level. Risk to reward. 53 pips versus probably 12 doesn't work. And that's why I'm not in this trade at the moment. But give me half a chance and something that makes sense. Maybe a break and retest of that level makes sense. Maybe a false break of resistance makes sense. So that's what I'm looking for. But I'm super keen on this dollar Swissy short at some point. It may not be now. Eurocad, holy snap and duck shit. Look at this. We've finally broken through that trade line, that monthly trade line or trend line, which of course means that I now need to think about trailing my stop again. Those of you who don't or haven't been following this, we've been in this trade since January 14th, I think it is. Potentially, I think it's the longest period I've held a trade for. And the reason I'm holding it is, well, it's in profit, but we're also getting positive swaps on this. We are rapidly approaching my next take profit level, which is 143.72. We may even be there if I were to sneak that up there. No, I think the level's there. So
this is a legendary trade, mate.
It's going well, isn't it?
It's great. Actually, just quickly on your dollar Swiss as well. Fundamentals would support a dollar short and a Swiss long.
Cool. Yeah, look, I can't wait to find an entry on that, frankly. I think it's a really good one. Where am I going to move my stops to? I said we'd be in this at Christmas, Ash.
I know. I think you're going to be in at Christmas, even if you only make one pip out of it in the end. You'll be like, no, I'm holding this.
I'll move my stop loss away. No, I won't do that. I want to see what happens when the retracement comes. If the retracement comes and we get further downside, then I'll move my stops down above the monthly pivot. But I think they're still in the right place, so I'll leave them there. And that will ensure I'm here at Christmas, I think, still in this trade.
Yeah, well, we've got a little while left yet, and we got the rest of this quarter. What was that, mate? Which chart is that?
Which time frame? That's the weekly.
Yeah, no, Euro. Which pair?
Eurocad.
Eurocad. Love it. I mean, you know, this. Helen, how are you? It's lovely to see you too. Just to quickly answer Ross's question as well, it's 10 pips that I go for every day. I might sort of like extend it out a little bit, but and there's no way that I get as much out of the market as I could. But the reason I like 10 pips, when Jeff finished, I'll show you why I like 10 pips from a personal level. But you know, it's a psychological thing, and I just, it makes me feel very comfortable. So yeah. 10 pips on the FTSE is my normal target for the day.
Hi, Helen. Great to have you back. Look, the reason I bought this up is not to shake the shackle, but 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row. No, sorry, 9 days in a row. This has been falling.
Wow.
So what I'm suggesting is the weight here is just too much to deny. So I'm not looking to trade it long, but I think you can now probably look to sell the rallies here on Eurocad. I think that could be a very, very fruitful thing to do. Not necessarily on any bigger time than the 4 hour really, but I'd love to see it come back to here. That would be good, about the 146 mark.
Is that the trend of the year, mate?
I don't know, mate. Is it?
I don't know, but I mean, you know, is it the case that you've actually picked the best possible currency pair to trade of the year? And the other question is, was this luck? Because that's pretty impressive.
Luck? What's that? This was as clear as it could possibly have been, where we had, you know, I went through this many, many times, where same principle, you know, how on earth is it going to get through that level? It just doesn't seem remotely possible that any time it was going to get through that level. So it just kept bouncing off it, but not just bouncing off it, you know, kabang, waterfall. And then it produced, actually it was on the monthly chart that we traded. Then it produced off the double top, you know, a new double top, a lower high with a candle that I love to trade. Green body, reversal bar.
And this is the, you know what, this is the great thing about, you know, trading buddies. And this is the thing that I love about sort of trading with you, is that I look at that chart and I see a complete mess and you see absolute clarity, which is why, you know, it's great to kind of stick with what you know in a way, isn't it? And just trade the way you trade. Don't get put off or romanced by anybody else. Helen sees a complete mess too.
But you can see the triple top, right?
It's like one of those magic pictures.
You can't miss the triple top, can you?
No, not now you point it out. But if I was to put that chart up, I'd be like, that is hideous. But you look at it and go, ooh, this is exciting.
I do, totally.
Yeah.
Because that's how I live, you know. It's double top, lower high.
Yeah.
Double bottom, higher low. I mean, how many times do I say that a week? I'm not sure. Maybe 100 times a week. Shoulders,
aren't I? So that's the pattern I see. Sort of, it jumps out at me. But yeah, brilliant analysis, mate, and some lovely trading actually, because you could have got out of this in a few different times, but it's really working out, isn't it?
Well, you've got to have a belief, I suppose, that the currency pairs you've picked are the right ones as well. Apart from the and you know, I'm a massive fan of the CAD, massive fan. Yeah, and I think that's just got that more to go. I that long since I've seen bad numbers for the CAD, and there might have been one or two thrown up. And oil is just gone again. It's gone through another. This is probably why we're seeing this at the moment, or part of it.
Yeah.
You know, if you're in love with both the currencies going in the same direction, then yeah, sure.
Yeah.
Anyway, let's leave that one alone. We're looking for retracement and then just continue on with the shorts, because I think once it's now broken this level, which has taken the longest time to do. I mean, this is a clear and decisive breakout, no question. So a pullback here is, yeah, exactly what you're looking for. Sell the rallies, mate, on Eurocad. That's the message for me.
Mm-hmm.
Aussie Swissy is the next one I want to look at. Or have I done Aussie Swissy?
That I don't know.
No, I don't think I have. If I have, guys, just pull me up. Now, Aussie Swissy, same principle as I just mentioned on dollar Swissy, I think, where we've been above here for the longest time, came back below it, false break above it, and now we're retesting that area again. So can I trade this? Well, my bias is long, right? Because I think the Aussie has got prospects. Don't have a reason to trade it right now because we're banging our head against this level. Now, my contention would be that if we can't get through this level, then we're going to go the opposite direction. But at this point in time, we're at a crucial level, or if you like, we're at a point of, what's that point they call it? Can't remember now. Yeah, one of those.
Confluence?
No.
Resistance?
No.
Point of contention?
This bloody craft. It'll come to me in about 5 minutes after the show. So thing is here, if we bounce off it and get a what? Lower high, then I would look to trade, because I would then have a double top and a lower high. But we haven't got anything like that at the moment. What I think might happen is we'll break through here. And if we break through here and retest it, then I've got a very strong reason to go long. That will probably coincide with this trend line, which can come from anywhere up there. So break retest is what I'm looking for. The opposite of that is break back underneath, retest from below. That gets me short. So we're at a point of one of those. The last one I wanted to look at, which we've already done, is pound Aussie. We're just about on entry there.
Just for everybody in the show, I'm taking another short on the FTSE. If you missed the first one, I don't know if you want me to quickly show you that.
Mate, I'm done, so you can absolutely go back. I would say one thing on the Euro 30-minute chart. If we get a bull bar here in the next 28 minutes, I'll be shorting this.
Okay.
Right, mate. All
okay. I'm taking another short on the FTSE, and I don't normally do this, but because we're basically back at the same level after taking profit on the first one, the same thing still stands for me. I still don't see why this would go through. The good thing about now is that if you are somebody that uses stops, you've got an area to put your stop if you want to take this trade. Now, I'm not saying that this isn't trading advice by any stretch or financial advice. I'm not saying you should, because I don't use the stop in the same way that you guys do. I do use protection or stops in some respects, but not in the same way you guys do. But if you look at this, the reason
you use protection.
I do. I do. Very important.
How did Molly come to be?
Now, if you look at this on the 15, now I like the resistance here, but if you look at this on the 15, this is the important bar here on the 15. Now, my overall view is that the FTSE is going to be a bit weak because of things that I've mentioned. This is the high test bar, if you like, and it is at resistance, and it's a pretty good resistance too. So what tends to happen, and you'll see this a lot, is what can happen is a bar like this gets created, the market starts to drift down, and then when it comes back, that is the area of resistance again, that the low of the high test bar, or shooting star, it depends what you want to call it. But that tends to be the low. And I don't want to confuse people, because this is to do with fractal. What happens on a 1 month chart, the same thing happens on a 1 minute chart, so you can analyze it the same. And this particular bar, if you look at a shorter term time frame, will have created a head and shoulders pattern. So if we go now to the 1 minute chart, what we can now see is the head and shoulders pattern. There's your left shoulder, there's your head, and there's your right shoulder. And this is the neckline. So all it's doing is retesting, if you don't like the high test bar aspect, it's retesting the neckline of the head and shoulders pattern. And that's why I'd like to see another drift to the downside again. Now, the reason I take 10 pips, and I'll do the same thing here, the reason I take 10 pips is that oftentimes, but not every time, but oftentimes what happens is the FTSE will come down and bounce somewhere that I haven't necessarily seen. And it's usually around about the 10, 15, maybe 20 pip range. I don't really like the bounces. I don't like taking trades up here, see it come all the way back at me, and get to break even, having not taken my trade off the table. So that's why I get out at around about 10 pips. Now that doesn't mean that if I was to hold throughout the whole day that I wouldn't get more money. I would on most occasions, but it just doesn't suit me. I don't like to think about the trades after they're on. I like to just say, right, I'm going to have this on, try and have a smash and grab, and then get on with my day. I want to try and get my trading done in the morning. And I don't usually take 2 trades in a session like this either. I would normally just be done. But this is quite nice. I quite like the look of this, and I'm also aware that you guys didn't get in on the first one. So the 15-minute bar has provided you a stop loss area if you were a stop loss trader. So that's why the trade is valid here for some downside. So we'll see if we get 2 out of 1 here, mate. But that's why, Ross. Anyway, that's why I take 10 pips. It's just a psychological thing. I don't want to be thinking about my trades beyond about half an hour if I can. So I like to sort of just get in and out, and then get on with my day, rather than sort of be looking at because the problem is, and I think everybody goes through this. When you have trades that are open, or when I have trades that are open, I'll check my phone, and I don't like that. I want to be sort of like when I leave the charts this morning, I want to be doing something else. I don't want to be reading a book and thinking, how's my trade going? I want to be sort of like knowing I've got my profit in the bank, I'm done. And if this is left open, I can still ignore it, because the way I approach it is that I will leave it. If it starts to burst to the upside, I'll just put in a stop loss at break even, and then I'll leave it until tomorrow, and I can come back to it tomorrow, because I don't use leverage, so I'm not having to kind of like worry about the fact that I've got any percentage of any significance at risk. So yeah, just to give some context on that, mate, and potentially another trade. We'll see how it goes.
Yeah, look, I think if you're trading intraday at any stage, and like when I'm trading intraday, which I haven't for ages because of my other commitments, if you're not taking profit, at say 10 pips, whatever, as you call it, first contact, I call it first support and resistance, same thing. If you're not taking profit there, you've got rocks in your head, because the computers they're going to drive it back. Yeah. Well, I suppose that's the point, isn't it? I mean, I've kind of given the 10 pip level, but this is the real key with it, is that when you look at the 15-minute chart, there's support here. So the likelihood that will bounce is relatively high. Now, some people will take half off and do all that sort of jiggery pokery. I don't do that. I just take it off. Stop that. Yeah. Yeah. I just take the whole thing off, mate, and then I'm done. I don't have to sort of manage it. I don't like to, even though I'm trading short-term time frames, I'm making a short-term time frame strategy as stress-free as I possibly can. Take all the trade off the table. Don't leverage it up, and get on with your day after it's done. I think it kind of suits me the best to do this. Oh, so it makes perfect sense, mate. Yeah, 100% behind you on the shorter time frames. Now, trade of the week. Have we got one? Oh well. And I don't want to steal your thunder, mate, but I would have gone for the Aussie, and I probably would have gone for the Aussie. I would probably go for the Aussie dollar. I think I might have mentioned this one before, but I probably would have gone for the Aussie dollar, I think, for trade of the week. Let me just see. The fundamentals say Aussie Kiwi, I think. Fundamentals say Aussie Kiwi. if I'm an Aussie fan, I would have picked the weakest currency, which is the yen, but that's just gone. It's skyrocketed. You can't get in there.
Right. Yeah. Definitely an Aussie pair.
So pound Aussie. I'll stick with pound Aussie for mine.
Yeah, I'm going to go. I'm going to go. I'm going to go Aussie dollar. Aussie dollar long.
Look out, Aussie. You've got a lot of weight on your shoulders.
Yeah, absolutely. Absolutely.
All right. I think we answered all the questions. I think we might have.
I think we're done.
I did see. There's one now. 15 minutes already reversed on FTSE. That's Helen, I think. Helen, you're in dollar Swissy short. Well, Lord, give it strength. But give me a chance to get in as well, will you? If you don't mind. Before it goes. That would be good.
We know that you're one of the big players in the market, Helen. So don't dump all your savings in it. Otherwise, none of us will get involved.
You got out already. Why are you out? Look at the current candle. It looks fantastic.
Yeah, but she might have made her money.
You're on short time frame. Good.
Yeah.
Excellent. Awesome. Way to go.
Yeah. Yeah.
All right. I think mate, you and I need 5 minutes. Have you got 5 minutes after the show?
Yeah, certainly do.
Okay, happy days. We'll call it quits then. Tomorrow is Tuesday, and Tuesday is
George's Day. Yeah.
So I was trying to think of something a little bit quirky. That'll do. St. George. Yeah.
St. George's Day.
You know, I used to be a massive St. George fan.
You did?
Hell yeah.
Apparently he was Turkish.
My grandfather played for St. George. St. George is a football side. Yeah.
Oh, okay. I thought you meant the English Knights.
Well, I'm sure they're named after him.
Because slayed
the dragons. Exactly.
Yeah.
And they were called the dragons.
Turkish guy is how we're now starting to judge him. I mean, you can't keep up with history, can you? When they wrote about dragons and stuff like that, you know, there's probably a pinch of salt in the story somewhere. His name probably wasn't even George.
But don't you believe everything that's Game of Thrones? That was all true, wasn't it?
Game of Thrones I didn't see enough of, but I am reading Homer, quite a lot of Homer's stuff about not the Simpsons character. About Troy and the Greek mythology, and I love it. It's amazing stuff. It's really good, and you know that there was a Trojan War, so you know that this thing happened. But of course, there's no real account of it. It's just a
Helen of Troy. There you go.
Yeah, well, it's the story's just brilliant. It really is. It's and actually quite a good reminder of not being too arrogant when you're just kind of generally in life, and things like that are really important with trading, not to get overconfident. And
I was going to say there's a lot of lessons in life that we can apply to our trading. There's no doubt about that, and in history, that's for sure.
Yeah, I mean, exactly.
at the end of the day, we're trading history, aren't we? That's what we're doing as chartists.
Yeah. Yeah, so to study history is quite it's quite a good way to do it, because you are kind of studying almost psychology, human psychology, historical human psychology. So it is. I think it's quite a useful thing to do. But yeah, I mean, the stories are as I say, absolutely brilliant. But was there an Achilles? I mean, certainly, the way that those early warriors were depicted were effectively descendants from the gods. So I think the jury's out a little bit, mate.
Indeed. Helen,
they found the horse though, apparently.
You like your history? Yeah, apparently.
They found the horse.
Did they find the ark yet?
I don't think they found the ark. I'm not sure about that. It's not in the book.
Come on, how can you not find the bloody thing? It must be so big. Come on.
Yeah, well,
seriously?
Yeah, I don't know. I think
I don't mean the Ark of the Covenant. I mean that big bloody thing they put two of everything in.
Oh, two of everything.
Including our forebears, Helen.
Yeah. Difficult one with the Ark, isn't it? I just don't know how they'd have the room for all those cages.
Oh, I can imagine the smell. Oh my God.
You wouldn't want the job of mucking those out every morning, would you?
Oh, Good for the plants, though, I've got to say.
Well,
But there were no
any
plants.
wasn't there?
Well,
Yeah.
they had to be. Otherwise, how'd they get it?
Oh, yeah, that's true.
Oh, no, God would have made an 8th day or something.
Yeah.
I'm getting blasphemous. We need to get
Okay.
out of here, Ash. It's time
All
to
right,
go.
mate. Okay.
I'll see you in a tick.
Yeah, so fantastic. Thanks, guys. Thanks for being our buddies for the day. Thank you to you, mate. Thank you to Angel, as always. We'll see you in the morning.
Happy days. Have a good one, guys. Bye.